Welcome to the second half of partnership accounting, and I'm going to try and break this up into some smaller videos so that hopefully it'll be a little easier to digest. What we're going to start out with is how we reflect partnership information on our financial statements. Because net income impacts each partner's capital account, it's really important that we differentiate how we reflect partnership net income from what we had done previously when we were dealing with sole proprietors, where we just had one owner. Here's an example of what an income statement would look like for a partnership. Now, before, when we were dealing with sole proprietors in your prior accounting class, we could get to the net income figure at the end of the income statement and we could stop because all of that net income was attributable to our one owner. Well, now we're in a situation where we may have 2, 3, 10, 100 owners, however many partners we have. So now we have to take that net income figure on our income statement and create an allocation section so that it's clear for those that are relying on our financial statements how that net income was attributable to each of the partners. So you can see in this case we had net income of $80,000. We have Kelly and Arthur, our two partners, and each of them took some salary, although nowhere near the same amounts. We have Kelly taking $35,000 and Arthur taking $10,000. According to their partnership agreement, they must have had an agreement that each of them received interest on their initial capital contributions, so that's paid out first. And then there was $15,000 left over that they split equally. And so between the salary allowance, the interest allowance, and the remaining income, all of that $80,000 net income figure is allocated between the two partners. So now we get to the presentation of our owner's equity section, except we are no longer dealing with an owner's equity section. We now have a partner's equity. So instead of just our single owner showing the balance in his capital account at the beginning of the year, the initial investments, the net income, then minus the withdrawals, and the ending balance, we now have to divide that among our two partners here. So that will be our statement of partner's equity as opposed to the statement of owner's equity that we've become accustomed to seeing as it relates to sole proprietors. And here we get to the partner's equity section on our balance sheet. And again, with a sole proprietor, we would just have an owner's equity figure. It would just be one number and that would be it. But we now have a partner's equity section instead of owner's equity, and it will show the balance in the capital accounts for each individual partner and then a total for both partners in this case. And I'm going to cut that off here, and we'll move on to the next video to talk about dissolutions of partnerships.